Welcome to today's webinar, being brought to you by WISE and our partner, Deutsche Bank. This is truly a global event. So while it's early in the morning for us and for our speakers, Chris and Shane in the US, I also need to say good afternoon, Jan, to our speaker in Germany. And good evening to Schnee, our speaker from India. I'm Phyllis Perillo, President and CEO of Working in Support of Education. We focus on creating economic advancement through the development of financial literacy and readiness for college and the workplace. I've been engaged in financial education for the past 40 years, and I can tell you with absolute certainty that personal finance education is more important than ever. In fact, it's a right, and it develops confidence for making financial decisions. And as you know, it provides greater equity as well as a path to economic well-being. Our goal today is not only to emphasize the importance of financial literacy, but also to learn from our amazing panel how personal finance matters are handled in Germany, India, and the US. We are fortunate to have Chris Murray moderate our panel. Chris is an information technology architect who has worked for more than 20 years at leading firms in the financial services industry, including UBS, NatWest, and Deutsche Bank. He is a dear friend. Thank you, Chris. The stage is yours.
Thank you so much, Phyllis, for that wonderful introduction, and thank you everyone for joining us today. I would first like to introduce our wonderful panel, as Phyllis mentioned, coming from all around the world. And first off, I'd like to mention or introduce Snehal Prakash Kair, who is from India, and she is a vice president at Deutsche Bank. John Messing is from Germany, and he's an analyst at Deutsche Bank. And then rounding up our team from the US, Shane Mitchell, who is from the US and from New York, and is also a vice president at Deutsche Bank. So we'd like to start right off with our first topic, which is going to be, how is money spent or managed in your country? And I'd like to allow Snehal to kick off with that.
Thanks, Chris. Hello, everyone. This is Snehal from Mumbai, India. And just before jumping into that discussion of spending and managing money the way it is done in India versus that in the United States. So we hear a lot of people, moving from India to the US for higher education and for work and so on. And I know a lot of people who say that there's a lot of cultural difference between the India and United States, between how people think here, how people live here versus compared to that in the United States. So there's a lot of whole cultural differences they find when they move from India to US. And I think that is the basis of the discussion that I want to have with you right now, wherein we bring up the point of there being a lot of difference between the way money is spent and managed and saved. A lot of it is to do with this kind of a cultural difference, which people speak about when they move from one country to another. And this is the basis which will be driving some of the points that I want to bring across to you in this discussion. So for example, take an example of a person who probably imagine a person who's saving on food and good shelter to have a good home, maybe to buy a home somewhere down the line in the future, or maybe for a wedding that is coming up in the family, someone who saves on food and good shelter right now for these causes that one envisages in the future. I'm sure people who have been born and brought up in the America and the United States would not be able to much relate to this person who's probably saving on food and shelter for a wedding or a home that is going to come up, say, 5 to 10 years later. Because that's not how Americans live or deal with things in their day-to-day lives. In US, that doesn't really happen. But if you speak about the people in India, it's not really something which is unheard of. It's not something that is uncommon, especially for the older generations here. If I talk about my own parents, my parents really saved on food and a good shelter for the time being so that they could buy their own home in the future when they got married. And they did that. They bought their own home, their first home, by saving. They put a lot of money into it, the savings into it, and tried to arrange a lot of money from various ways and means, and then brought their first home. So that's how the older generation in India has lived by and done things and bought things. And that's the kind of culture that we are in. Of course, when it comes to the younger generation, for example, myself or anybody in their 20s or 30s, we are okay with, kind of availing home loans or with some interest rate to buy our first homes. So that's the kind of change that is taking place now, where the older generation was not too keen or even taking loans to buy stuff. But that is changing a little bit with the younger generation being okay to take some kind of a debt to buy their homes. But still, I would say that there's really a vast majority of difference when you compare the whole of India with the US. That this is still a point of difference. It's still a cultural difference where the Americans are okay with taking loans with lower interest rates to buy the stuff they need, rather than, saving on money and being frugal and economical in their day-to-day lifestyle. That's one of the major points of difference in the behavioral tendencies and culture that we see in India and US. Coming to the spending culture as well, in the US, we see that there's a lot of extravagant spending. And maybe if you, for example, if you see those events of Black Friday and Thanksgiving, there's a lot of shopping and spending going on in that time and during those days. But that is something which is not really much observed in India, where a lot of spending and extravagant spending is happening in India. So the spending culture is really very different because there's a saving mindset here in India compared to the spending culture. And that's one point. And another thing is the way children live in India, for example, or maybe the younger kids, once they're like 16 or 17. In US, we know that people generally move out of their homes and then they start living independently, take decisions independently, manage money and finances independently in the US. But that is very different from what happens in India, because most of the Indians here would stay with their parents even after they start working, unless, of course, they need to move cities or for work or travel somewhere due to some exceptional circumstances. But otherwise, they would really stay with their parents if it's in the same city. We do have also a culture of the sons, where even when the son gets married, they will stay with their parents and take care of their parents in the old age and so on. And therefore, when it comes to finances, since it's a joint family, since everybody is staying together, living together, the financial management is really a family affair rather than an individual affair. So when you want to buy something, it's a big thing you want to buy, the whole family really participates in it, and the decision is really taken jointly in terms of how the finances are dealt with and spent.
So Snehal, that's super interesting. It's almost like you learn from your parents as well then, right? You're taught some of the good habits from that. That's fantastic. Jan, what about you in Germany? How would you say, money is spent or managed, or maybe contrast what you see from what Snehal just said?
Yeah, sure. So first of all, I'd like to welcome everyone here from Frankfurt in Germany. Glad to be here. Basically, I can relate to some sort of, or at least a little part of what Snehal already said, given that in Germany, we are also rather focused on saving the money that we have. Also as young people, especially, as I can relate to that specifically well, because already in an early age, even when we are in school or when we are, moving cities to go to university, which is rather common in Germany, compared to being in India that you rather stay at home. In Germany, you rather, travel to different cities in order to go to a university. You will most probably find young people have a job besides their studies, basically, in order to be very early, very independent from the parents' house, not because parents don't want to pay anymore for the children, for housing or whatever, just because that is rather the mindset that I witnessed, just being, completely independent, or at least at large parts. And then being able to save already some money for also housing considerations, which also seem to be the case in India. Obviously not in a way that, basically you save the money and then can buy a house all in cash, but rather to have a solid starting capital to then basically take a loan based on that.
Okay, fantastic. Shane, how about you in the US?
Sure, thank you. And excuse me, good morning, everyone. It's a pleasure to be here with you all and looking forward to the discussion. I'll preface my comments by saying in the US, I think spending and saving habits vary vastly depending on your socioeconomic status and also your ethnic background as well. I'm going to speak more from my experience, as well as target my comments to the demographic of the audience, who I think are mainly high school students or on their way to college. The main point of difference from the Snehal and Jan is the use of credit in the US. I think credit is a lot more prevalent in how we pay for things and spend money here in the US. You're introduced to credit at a very early age. I can remember in college, credit card companies being on campus offering us credit cards. And at that point, not everyone has the appropriate financial education or financial literacy to understand what that means to own a credit card. So some people end up getting into trouble with it. But it's also a very good tool because credit cards can help you build a credit profile and a credit history, which we'll talk about why that's important later on. So it's one facet of spending here that I think is very different from India and the US, where people get credit cards very early and use it more prevalently for their purchases. From the perspective of spending as well, I think the US is a lot more consumer-driven economy. So we don't save as much as other cultures. And even children in high school or in college, typically you start working by the time you're 14, 15, you have your first job. And usually that money is used to finance, your hobbies, your things for clothes and stuff like that, electronics, rather than saving. And so I think that's a big difference, where in the US, as you start working, your focus is on purchasing items for your comfort or for your entertainment. And the other cultural difference, I think, primarily with India, is typically after college, you leave home for college when you're 17, 18 years old. And that's usually where you start developing your spending habits, because this is the first time you're away from home. You're managing your money, you're managing your own time. You typically have a job as well as you're going to college. And that's how you start developing your spending habits. So you don't necessarily have your parent close by or someone to help guide you in how you spend money. So those are some of the major differences between the US and other countries.
So Shane, let me ask you this. Growing up in the US, what do you think, when was the first time you knew what a credit score was?
So funny enough, I didn't grow up in the US. I grew up in Jamaica. I migrated here after high school. And like I said, I remember credit card companies being on campus offering credit cards, and they never tell you, this credit card is going to cost you 15, 19%. 20%. So I didn't really understand. It wasn't until you get to maybe, speaking personally, I got out of college and I was looking to purchase my first car, rent my first apartment. Then my credit score became relevant. And then by that time, some of the habits you've developed probably already started to impact your credit score, which I think is something we'll talk about later on.
Sure, sure. Snehal, how about you in the question of credit and credit scores in India?
Yes, so we do have 3 to 4 rating agencies like which are governed by the Reserve Bank of India here. There are licensed credit bureau companies like TransUnion, CRIF, and Equifax, and so on. The first time when I became aware of my credit score was when I took up my first job, and then a lot of credit card companies really approach you to they call you up and ask you to they explain the features of the credit card and everything. And of course, as Shane mentioned, the rates are pretty high on the credit card if you miss payments and so on. But since there's a kind of a discipline inculcated in us with respect to money management and paying the bills by the due date and so on, so therefore the younger generation is okay with taking up credit cards and then mostly paying the bills by their due dates and so on. So that works well. But of course, on a majority basis in India, people are still reluctant to take up credit cards and any kind of debt offerings. But with the younger generation having a lot of more opportunities and the standard of living rising, we are still open to take such kind of debt and then managing it in a better way. But yes, these 3-4 agencies do keep track of the credit scores, and they are all based on your credit utilization, your length of your credit history, and whether you have secured or unsecured credit in your history, and how you're paying it, your track record, and so on. And they allocate a score to you based on that.
Interesting. That's so you kind of had the similar experience. It wasn't until you went to school that you really had a consciousness of what your credit was, your credit rating, right?
Yes. When I also wanted to buy my first home, when I want to take a home loan, that's when the credit companies usually give you a report which you need to have when you're applying for a loan and so on, and when you need a credit card. So yes, when I got my first job at around 22, 23, I was pretty much aware of my credit score.
Fantastic. Jan, how about you in Germany?
Yeah, I mean, that is, I think, a big similarity compared to also the US and India. Or at least I can speak for myself and also for some fellow students and friends. We also are only aware of, credit scores and also credit cards once we go either into college or into some other further activities after school. And what they typically do is, i.e. the credit card offer firms, basically, they tell you, hey, you're a student and you can have, a credit card with a limit of 1,000 euros. And basically for you to be able to travel through Europe, so you can, use the credit card to pay in other countries where you can't just simply use your debit card. So that is, I think, the main reason why they approach us. And this is then also obviously the time when you first get familiar with, how can I even get a credit card? What are, the factors? And obviously a big factor there is the credit score. And in Germany, you basically have one central credit scoring agency, if you want to call it like that. And they just keep track of everything you basically do. Yeah. If you have, cell phone contracts, or if you just have normal checking account, if you have, finance your TV, for example, for a zero interest rate deal, they still keep track on that. So they basically scan everything of your financial behavior, so to say. But the key difference, I think, is when it comes to credit cards, that in Germany, you basically, the default credit card contract is that basically you can use your credit card limit within a month. And then they just basically book whatever you have paid with your credit card from the underlying, bank account, basically. So you always have to pay it at the end of the month, respectively, which is, I think, great, because then you don't really run into the danger for, piling up more and more credit, basically.
That is interesting. That's a big contrast.
Yeah, I was just gonna add to that in the US, that's not the practice, right? They'll give you a credit card with a limit, say $1,000, and if you run up against that limit, and you're allowed to pay in installments, so you could have a credit card balance for years and years. And if you max out one credit card, it's usually not hard to get another credit card. They'll tell you can roll over the balance from the previous credit card to the next credit card. So it almost, if you're not conscious and paying attention to your spending habits, you could easily run up credit card balances that are very, you end up taking a long time to pay off because of the high interest rates that typically associated with credit cards.
Yeah, I mean, that makes complete sense. And I think that's interesting. An interesting contrast there for sure. Certainly Germany, I think, kind of helps to prevent you from getting into trouble. Whereas here in the US, I think you can easily get into trouble, as you mentioned, Shane. So our next topic is college and or university, and how in your country does a student or a family pay for that? And we're going to start off with Snehal for that.
Yep. So in India, we have these two kinds of universities, the public universities, which are to some extent funded by the government, and where the fees would be very nominal, not much at all. And in fact, for girl students at times, they're absolutely free as well. No money to pay until high school for the girl students. And these are, in fact, the world-renowned Indian Institutes of Technology, which are funded by the government to a lot extent. But then since the admission to, so they take the family income into consideration in these public universities, where the family income is below a certain level, then they'll offer free education to the kids from these families. If it is between a certain range, then they would also offer you options of getting loans and debt from at very low interest rates, which the students can then pay on once they have a job and once they've completed the degree. But of course, admissions to these public universities at times is also quite competitive, which brings us to the next option of the private universities. So in the private universities, the fees may be much higher, but then the option here is to avail an education loan, which the most students would do in case the fees are higher. And if they don't come from low income backgrounds, then they would pretty much take an education loan, which is offered at lower interest rates in India. Or else even we even have situations where the parents would have saved money for their children education, and then the parents would also fund their children education. I've seen a lot of friends opting for those options as well. So these are pretty much the options. Either you take a loan from a bank, or if you come from a low income background, you get some scholarships or some waivers in fees, or your parents pay for it.
And those loans are subsidized by the government there in India as well? That's what keeps the rate low?
The banks, the public PSU banks, the public banks have pretty much low interest rates, but then they would also ask for some kind of a mortgage or something like that to offer those competitive interest rates to you. So in my case, since my parents owned a home, they could have that as a mortgage until I completed my studies, and then I started repaying it, so I could get a lower interest rate. But other than that, if you go to a private bank to take the same education loan, they will charge you a little bit higher, and then they may not have any requirements of a mortgage or so on. So it depends on those circumstances.
Interesting. Jan, how about you in Germany for the university question?
Yeah, so I think, again, it is some sort of similar to India, as already the first question. So we also have, public universities and private universities, but the public universities certainly make up, say at least 95% of all universities in Germany. And for those, you effectively only have to pay like very, very little fees in order to be able to, go to the library or whatever. So that is really a good thing. And I think the key difference is that compared to India, where you stay at home, apparently, as Nia just said, in Germany, you rather, go to different cities to study. So this means that effectively the money you as a student require doesn't really relate to the university itself, but for the possibility of living in a new city, which is mainly driven by the rent you have to pay. And this is then either financed by, having a job in parallel, or the second option is basically by the parents. And third option is also the possibility we do have to receive a loan from the government, and which is why the interest rates are there also very low. Also, as in India, dependent on the family income. And so this is basically the situation. And on the loan side, you basically have to repay it, 5 years after you basically finished college, in order for you to have enough time to effectively earn the money and then basically pay it back. But that is in general, that's not really like very high amounts, because it's just rather an additional funding compared in addition to what the parents are already able to pay. So that's, yeah.
Yeah, 5 years is a long time though. That's very comfortable compared to the US. I know it's certainly significantly shorter that you're required to start paying off your loans here in the US.
Yeah, and you even have the possibility to say, you know, either you pay it all at once, or you pay it, you know, every quarter or whatever. And obviously, if you pay it all at once, it will even be cheaper in total because of present value considerations. But yeah, I think that's the main consideration there. And on the other side, the private universities, they are also some sort of expensive. Say it's like, you know, $20,000 or $30,000 or euros a year, but that's certainly not the amounts that probably in the US are basically common. And obviously, this is also like 5% if at all, of the universities in Germany.
Yeah, I know, Shane, in the US, there's a lot of different options and a lot of different scenarios, right? So let's hear your thoughts on that.
Yeah, so you touched on a very good point. There are a wide range of options for colleges and a wide range of costs associated with those options as well. So typically, starting from what's the cheapest, you usually have schools where if you're able to get in, they have stringent requirements to get in. They'll finance you don't have to pay any tuition. I can think of Cooper Union here in New York, and then New York University's medical school, where as long as you can pass their requirements to get in, they'll pay for your tuition is covered. Then you have city and state schools, where as long as you live in that city, or the fees are usually a lot lower than if you come from another city or state to go to those schools, and or some of those city colleges could be free. The college I went to here, City College in New York, it was a very nominal fee. And also, I think back in the 60s, it was free, but over time they started charging. And then you have private colleges and Ivy Leagues, which are considered more expensive, and some are considered to be some of the better schools. In terms of financing, there are a wide range of options as well. Typically, if you're have a certain level of aptitude and your family income is below a certain level, you can usually get scholarships. And if you're a member of minority groups or stuff like that, there are usually scholarships available to you that you can help to finance your education. Parents are a big part of financing children's education. It's not unheard of for people to open savings accounts or investment accounts when their children are born to finance their education later on in life. A lot of people work during college to help offset the cost of their education. And then there are student loans, which in the US, it's a lot different. In terms of you can get government subsidized loans, or you can get private loans. And a lot of people, depending on the school you go, you could leave college with very big student loans, which you could end up having to pay off for a long time. There's some flexibility there. So if you take government loans, if you go into the public sector, like you're a teacher or something like that, the loan gets forgiven after a certain point. And even if you're not in the public sector, I think after 25 years, that loan will get forgiven as well, as long as you stay on top of your payments. But it's a very big thing here, and it's been talked about a lot, because I think what's happening, you have a lot of people who've left college with a lot of debt, and they're unable to do things like buy homes or start families and things like that. So it becomes a drag on the economy. So there's a lot of talk about how we can think about that in a different way, so it doesn't have that much impact on people leaving school.
Sure. I mean, the cost is something, certainly for the most of our audience coming from the WISE programs around the United States, you're about to face that college situation. And but as we need to keep things moving here, let's just proceed with, you've graduated college, you're working. Now let's start talking about retirement, and really, when does that come into the picture, and when do you start to think about that? Because it certainly, for a lot of people, it isn't the first thing on their minds when they start working. They're thinking about paying off those loans, perhaps here in the US. But Snehal, what do you think about that as far as from the retirement perspective?
Yeah, you're right. We don't think much about retirement, especially the younger generation. We don't think that much. But then we have this mandatory contribution from our income going to our retirement account, which is called the Provident fund in India, which is similar to the 401 probably in the US, but in India, it's a mandatory thing where a portion of our salary will go to this Provident Fund account, and an equal portion will also be contributed by our employers to our retirement account. And this account fetches us really good interest rates compared to any other accounts. Compared to a savings account, maybe the interest rate on a savings account would be 4%, a fixed deposit would be 6%. But on the contrary, the Provident Fund account, the retirement account would be 8 or 9% annually interest rates on that. So that's a pretty good number, and that allows us to save funds for the retirement. And usually if you're working for a large tenure of like 30-40 years, and it's going to be a big amount at the end.
Curious as what age can you start to draw down on that Provident Fund account that you've established? So what's the retirement age, I guess?
The retirement age would be around 60, but in case of exceptional circumstances, like if a person wants to get married or wants to purchase the first home, the person can still withdraw after 7 years from this account. In case of there are some exceptional situations which have been listed down by the government. Of course, one of them is a home or a marriage, and there may be some other medical situations as well, probably. But after 7 years, the person can still withdraw from this account.
Okay, interesting. John, how about Germany and the retirement question? Certainly, and please include the age of retirement, because I'm very curious to hear what that is in Germany.
Yeah, all right. So I think the retirement planning is basically at least twofold in Germany, because we have a governmental or government-supported retirement savings, so to say, or payments, because once you basically get into working, you obviously get a paycheck, and within that you will see that you will pay for a so-called retirement security, so to say. And what this effectively means is that all the people that are currently basically working and paying taxes to government will also finance the people that are currently in retirement. So how this works is that if you go into retirement at a specific age, I will come to later, basically you will receive money from the government, but this money you receive from the government is basically financed from the people that are currently working. And this is one part of your retirement fund, at least it should be, because at least for us as a young people, because in Germany, you rather see the tendency that the young people are getting less, so to say. So I wouldn't be too confident about myself now receiving the same retirement funds, basically, compared to the people that are in retirement currently, because simply once I will be in retirement, there will just be not enough people to, basically generate the same retirement income compared to the ones that are currently in retirement. So yeah. This means that you effectively have to do additional savings, and you do this by the additional possibility of getting engaged with your employer also, because your employer also sets aside some small portions of money, and you can basically decide on various options how you want to spend this and how much you want to contribute to that in addition. But that is then also an additional source basically of future retirement funding. And then the third one is certainly the additional private funds. Yeah, so basically just buying ETFs or shares or basically privately or actively managed mutual funds. So this is rather uncommon as so far, but I am sure it will become more and more important given just the development that we will see on especially the government funded retirement funds.
So the second category you mentioned, is that mandatory, that the part of your paycheck is mandatorily deducted from your employer?
Yes.
Or you can opt? Yeah. Okay.
Yeah. So the employer pays one small portion, and then you can basically decide, how much in addition do you want to contribute to that.
Okay. Interesting.
Yeah. And the retirement age is basically I would say sort of flexible. You can say, okay, I also already want to go into retirement with 55, but then you will obviously get less government retirement funds, so to say, if you have managed to, pile up a lot of money, with your ETFs or shares or whatever. good for you. But the government portion of things would then obviously say, yeah, you will get less retirement funds from us at least. And you can also go into retirement with 67. I think this is now currently the default option, so to say, and then you would receive the full amount.
Interesting. And Shane, how about your thoughts on retirement and when you begin to save for it?
Yeah, so there are a few options, a few categories to think about here in the US when it comes to retirement. So the first is usually Social Security. And everybody that works, when you look at your pay stub, you will see a Social Security tax that's taken out of your paycheck. And you pay that throughout your entire working career. It's not a large amount. And when you get to retirement, you start to get a certain amount of money from the government every month. It's a very small, it's not an amount that you can really live off of, depending on your standard of living that you're aspiring to achieve at after retirement. And also, the solvency of the program is also seems to be something that's been talked about, that it might not be around or it might not have enough money long term. So, but that's still an option for people today. Then there are pensions that companies used to have. It's not very common anymore. Very few companies have pensions where the company would actually set aside money so that if you work over a certain amount of time for the same company, when you retire, you continue to get an income from that company, and as well as medical care. But a lot of those pension funds have been converted over into what we call now 401ks, which employers sometimes manage for their employees, and manage in the sense that you contribute a certain amount of your income into your 401k, and the company will match up to a certain level. So if they'll say, if you pay up to 5% of your income, we'll match that 5%, so you'll get 10% of your income. But you can pay as much as you want from your income within certain limits into your 401k plan, and that's invested for you until you retire. And then the balance of the securities in that fund changes as you get closer and closer to retirement. So when you're younger, it might be more stocks and things like that. But as you get closer to retirement, it starts to transition over to bonds and more secure funds. Then there's your normal savings and investing, which are things that some people are able to do depending on your income level, and other people aren't. So, and it goes back to the question, the thought I had before, which depending on your socioeconomic status, you might have inheritance that you've inherited that you continue to invest throughout your life, or you're making a certain level of income where you're able to invest in the stock market or things like that. But that's not something that everybody's able to do, depending on how much money you're earning.
Fantastic. That's a great roundup there. I think one of the other interesting things, I just wanted to make sure everyone knows, we're getting some great questions in the Q&A, so please keep them coming. We're going to get to Q&A in just a moment. Wanted to move to an interesting question about how is technology changing the way money's managed, and especially focus that on from the perspective of you as you came through your schooling and then now you're obviously all working. What are your thoughts on that? How is technology changing that now today? Snehal?
Yep, I think with the technology and a lot of things being digital now in the banking world, I think people are now in India, people are now at an ease where they can, take some kind of a debt or loans, because there are so many options and so much transparency around it, where they can just at the click of a button on the internet get a lot of options and the terms and conditions enlisted in front of them, and understand what kind of debt and loan options are available to them. So I think that is making them a little more comfortable and easier to avail of debt, which was not prevalent in the older generations. And therefore, now the younger generation is also more comfortable in availing these kind of options, where you don't have to go and even visit a bank or an institution to find out what kind of rates you can get, what kind of options are available, what's the tenure and so on. You can just sit at home and with ease through technology, understand all this information and make a decision. So I think that is one benefit, and what's driving people also to avail of debt. Then I think secondly, also the way people spend money on shopping or on groceries or anything. Previously, it was like just through a brick and mortar shop where they can go and buy stuff. But now, since a lot of options are available online, and with technology and with the ease of payment and banking and wallets and credit cards, so much has become, everything has become on the internet, and you can just make a purchase soon and get everything delivered. I think people are now also moving to the online shopping and availing these kind of options. And the way people manage cash, of course, now it's like people don't manage cash at all. Now everything is happening just by online transfers. You want to pay a friend, just do a Google Pay or a Paytm wallet and so on. So the cash management and the exchange of cash from one hand to others also reduced a lot. So I think technology has really made a lot of changes in the way we manage and spend money, and it has brought a lot of ease in people's lives. Yeah.
Interesting. Go ahead, Jen. And what are your thoughts on that? I find it interesting, just the difference here. Obviously, I think when it comes to how money is being managed and how technology is changing it, you would think it would be very similar around the world. So what are your thoughts on that, Jen?
Yeah, so I think it's basically the same right now. With the possibility to even pay with your phone or your watch, depending on what kind of basically product you have. It's just amazing, and this is something that is more and more commonly available here in Germany, to have the possibility in a store or whatever to pay with your phone. But also the people are getting more and more into it, because at first, there were those considerations on, is this is the security aspects, is this all safe? Am I, then a suspect to being, basically fraud or anything? But this is more and more rubbish now, and basically, yeah, this is very, very easy now to pay everywhere, basically, with your phone, even at bakery shops or whatever. So this is really helpful on the payment side, and also I can relate therefore to what Snehal says on the cash basis, because I personally don't own a lot of cash anymore, because I do everything with my phone or online banking account. Even if I owe someone, I don't know, €5 or so, I just basically transfer it via phone. So that is certainly an aspect I completely see. And also on the other side, you can, on your notebook, you can simply just apply for a loan or increase your credit card limit if you want it. You can basically get a consultancy meeting and just do this via Zoom or whatever. You don't even have to go into a branch anymore. So there's just lots of things that are changing currently and will change in future. So yes, I can completely see a difference in technology, and I think this were just some small parts.
Sure, and I think with the pandemic obviously facing all of us globally, the cashless payment and the non-touch payment has become a big thing. Shane, has that impacted you, and are you using your phone to pay for things now?
I am, and I think it's increased over time as more and more merchants accept cashless payment options. The other aspect I'll add to this is, how you manage your finances. I think it's gotten a little bit easier, right? I remember when I just started working, writing checks and mailing out checks to pay my bills, or going into the bank to do transactions. I never have to do any of that anymore. I can pay almost all my bills through my bank account online or through my phone. And anything I want to do at a bank, apply for a loan, increase a credit card limit, that's all available to me. One of the benefits of that is now all your transactions are easily available to you. So you can track and manage your spending a little bit easier, instead of, sitting down at the end of the month trying to balance a checkbook. So I think that's one benefit of it. The other aspect that Snehal and Jan didn't touch on that I think is very, is moving in the right direction. I think a lot of people have more access to investing now. So if you think about an app like Robinhood, where you can start buying, single stocks, and you don't have to deal with a broker or anything like that. And I think in a sense, it's making investing in the stock market a little bit easier. And I think as time progresses and as more people start doing that, I think that would be definitely a good thing. The one other thing I'll say is, I think in terms of cashless payments, the US is a little bit behind some of the places like Europe and Korea, where there almost nobody pays, at least within a certain demographic. Most people are doing everything on their phone now, I think. But because of the pandemic, the US has certainly, that acceptance adoption has certainly accelerated in the US.
Yeah, I definitely see that myself here in the US as well. we're going to switch over and hit a couple of these Q&A questions here, if you don't mind. And we'll try to take this as kind of a rapid fire round here. So going around up to all of you. So we have a question here for, did you take financial education classes at school or university, Snehal?
No, I didn't have to, because fortunately I come from a family where my dad and my brother are both in the finance field. My dad is an ex-banker and my brother is a chartered accountant. So as I was growing up, I had a lot of this financial education. I was fortunate to have that at home itself, where a lot of things were taught to me since childhood. So I personally did not. But if you ask me about my friends, I know there's not really formal emphasis on financial education or such matters, savings and investment really being done here in India. There's not really a formal emphasis on it. You just learn by looking around, talking to people, your parents, friends, relatives, what everybody's doing, and just learn according to that and manage money. But there's not a formal emphasis as such on financial education in India, unfortunately.
How about Jan? So, and is there same question? But is any of this required? Do you have to take any personal finance classes?
No. I mean, simple answer is to myself. I didn't take any financial educational classes in high school, but I did this in university basically because I studied banking and finance essentially. So there you kind of, you had some courses and whatever. But if I hadn't done that, I certainly wouldn't have the knowledge. And it's similar to India, where you just basically, if you're not into the topics by your university or whatever, you just don't get to know it at all, or you just basically have to be very, very interested into the topic to get a sense on
it. I completely echo that. I think there's no I certainly didn't have access to any formal personal finance education, but I think it would be a good thing, especially given the impact it can have on your, the rest of your life. And I learned a lot, honestly, by making mistakes and having to undo those mistakes. And I think there's a lot of information out there now. You can find out almost anything you want to by going to the internet. But if you think about it, if you had to learn calculus without a structured curriculum, it would be a very difficult thing. So for people who don't have someone in the home that's financially savvy, or they don't have a deep interest in finance where they can go out and look for the information, I think it becomes a big gap in how you kind of learn about money and manage money as an adult.
For sure. Well, so we have a clear winner, Snehal. You're the winner of that category. Having the family members there obviously really prepped you well. So that's fantastic. So how about just the basic question of do young people typically buy things in cash or pay in installments? I think you kind of answered that already, Snehal, when you spoke about putting money away for buying a large purchase or something like that you want, right?
Yes, if it's for young people, then maybe depends on whether they are working or not working, finished their education or not finished their education. But generally, if they are not working, then at times even parents give the kids sometimes the money or some pocket money or something like that, which they would end up saving for themselves and just for spending. So they might just collect the money and then buy something for themselves at one point. But other than that, if they are working, and it's not cash driven much for the younger generation, not at all cash driven. If it's a big purchase they want to make, it will be either through a swipe of a debit card, wherein if they don't have a credit card, don't want to take any debt, then it will be through the swipe of a debit card where the money would be debited from their account if they are working and they have the money. Otherwise, it will be through the credit card transaction where they have to pay after some 45 to 50 days. But no, if it's a big purchase, then it's not cash.
Okay. And I think that our next question is something I think we already know the answer to, but in Germany, Jen, student loans, do they need to be paid back within 5 years, or is that when the first payment is due? I think you pretty much answered that, correct?
Yeah, that's essentially both. You have to start paying after 5 years on average, and then you can either pay it like one time or then again over a horizon of 5 years.
Interesting. So that's fantastic. So you have 5 years to pay it off. You don't start paying off until that 5th year starts, correct? Okay. Yep. Fantastic. Let me let me look at this. We have a question from an anonymous attendee. Does age and the amount of years you spent working in a workplace affect how much money you receive for financial insurance when retiring?
Yeah, I mean, I guess I can go ahead directly. It certainly does. So, for example, if you have been paying into that insurance for the entire life of your working career, so for example, I don't know, 45 or even 50 years, if you then even retire late, for example, with 67, you will certainly receive more governmental retirement funds than if you only work for 20 years. Which is also the reason why you receive less governmental retirement funds when you already retire with 55 than compared to 67, which was my example, I think, earlier.
Yeah, I mean, here in the U.S., if you're given that most retirement funds are 401k focused, I think the earlier you start paying into your 401k, obviously the more money you save, and also the more money that's being invested as you go along. I mean, you can start putting money into your 401k at any point in time, but if you wait until you're, 40, 50, that money wasn't being invested over that course of that time. So you lose out on time. So the earlier you start, the more beneficial or the more money you'll have later on.
Yeah, pretty much the same, I think, around all places. Yeah, same in India too. Yep.
Fantastic. We just get back to COVID-19 as a question was raised about how has COVID-19 impacted personal finances in your country? Jen, what do you think about that in Germany? I know you guys just sadly had announced another full lockdown there for the country of Germany.
Yeah, I mean, you basically just, so for personal finance, it is certainly, you basically don't go that often. You basically just don't go out, right? So you don't go to the movies, you don't go to bars, or you just don't go anywhere essentially. So you kind of have more money in your pockets now, given that you simply don't have the opportunity to spend it. And this then equates into more and more online shopping activities. So I guess, or also because you just sit at home the entire time, you just start, updating your residential features, so to say. Yeah. So I don't know, new chairs or new tables or a new TV or whatever. So I guess kind of the focus of consuming, if you are consuming, kind of changes. Yeah, I think that's the main part.
Okay, fantastic. Shane?
Yeah. So I think in the US, it's so in addition to what Jan says, and I think that depends on where you are in the socioeconomic status. So somebody like me that's fortunate to be able to stay home and continue working, and I'm not going out to work, spending money on commuting or buying lunch or stuff like that. Yeah, I think it's been for lack of a better word, a plus. But if you think about people that work in a supermarket or someone that works in a restaurant, the impact on a lot of people of those is different. Those people are either out of a job or they still have to go out to work. So the impact it has on you, I think, depends on where you are on the economic scale.
That makes complete sense. And I wanted to wrap it up by maybe you could all share with us the most important piece of advice you would give to a young adult beginning in their financial journey. Our audience, as you know, is primarily high school students here in the WISE program around the US. And we'd really like to hear any of your thoughts there as far as the advice you could give to these folks. Sneha?
I think it would be great for the students who are in the early years of their life to really think about these things and try to gain a lot of knowledge and a perspective on these matters. So just understanding on what kind of options are available for them, what kind of investment options, and how they can spend and invest their money better at an earlier stage in their life. I think that will make a lot of difference. And being aware of what is available to you and what maybe gather the experiences of people who are older to you and understand from them, and then carve out a path and think about how they can invest and manage their money better going forward. I think that's something which the students should be focusing on to get a lot of knowledge on these aspects firstly.
Knowledge is power, no question about that. Jan?
Yeah, I mean, I think Snehal already covered lots of things I would already and also advise. I think it's just important to get a sense on, what are some traps you can basically run into, and what are also some possibilities that you have as a young adult, basically, which, for example, is investing in ETFs, just as an example, because the earlier you start, the more you will get out of it. If obviously your situation permits you doing that.
Sure, that makes sense. I mean, the earlier you start, Shane, I know in the U.S. we're encouraged to start early. I have three children, and two are college age, and certainly I'm impressing upon them the same thing. As soon as you have that opportunity to start to save, you do, and it's not just for retirement; it's saving to make sure that you have a financial cushion, right? I know that's an important part of the WISE curriculum. And what are your thoughts as far as advice, Shane?
So in addition to what Snehal and Jan said, I think the only piece I'd add to it is the biggest cost or financial decision you have to make over the next couple of years as high school students is your college education. And I think from that perspective, knowledge is power. Make sure you know all the options available to you and your parents, and don't just jump to the easiest thing that will get offered to you, obviously, which are student loans, because that can have a very big impact on your life. And the same comment, knowledge is power, goes for everything else again. Even if your institution or your school doesn't offer personal finance education, like I said, the internet's there. Sadly, you have to search for it, but I think the effort, the benefit is definitely worth the effort to improve your financial literacy.
For sure, that's great advice for all of you, and I think really wanted to thank all of our panelists again for joining us today. I certainly learned a lot, and I think this is very useful for our entire audience. Just to remind everyone, you are going to receive a short survey at the end of this, and asking for feedback. We really appreciate that. As you know, the WISE organization, we're really working in support of financial in support of financial literacy is really, really important for all of us here. And we did record this webinar. We're going to send a link out to you. Hopefully those who weren't able to join live can be able to see this. And we would again like to thank you for joining us and emphasize the importance of personal finance education for young people all around the world, no matter what country you're coming from. Thanks again for joining us, everyone.